Good afternoon and welcome to the FT's Global Commodities Conference. I'm joined this afternoon by Brett Olsher, one of the most senior M&A bankers operating in the resources space at the moment. Brett, thank you for coming.
Thank you.
Now, could I just ask you what your sense and assessment is of the industry at the moment? Clearly, we've had a year that the chief executives have come in, they've sort of self-flagellated themselves, almost said, we've got to stop building these big projects, we've got to rein in spending. To a degree, they've done that. People are even talking about handing capital back to shareholders now. And what's your assessment of where things stand at the moment, and what sort of people are saying to you, investors, institutions, about the industry now?
I think from an industry perspective, the companies are a great deal healthier. The interest rate environment has been very attractive. The Federal Reserve banks have been very accommodative. And as a result, the companies have refinanced balance sheets that got a little bit heavier during the super cycle with a high investment quotient alongside what was declining commodity prices post the crisis. So the rebalancing has taken place. The companies are in terrific shape now, and they're naturally looking at the balance of capital being allocated to the business versus being allocated back to stakeholders. And I think we will see some return of capital, over the next period, which was to be expected. I think from an investor perspective, it's still early days to be going long, the sector again.
So if we could just move on then to a deal that you've been working on and was announced earlier this week, X2.
Yes.
New vehicle of Mick Davis, the former Xstrata chief executive. He's raised $2.5 billion with some more to come. Can you talk us through some of that deal, why people wanted to invest with Mick, and a bit about also how private capital can actually come into the mining space now and look at deals and perhaps do M&A, whereas some of the companies operating in the space don't want to do that at the moment because they're scarred by what's been before?
The team at X2 is a highly experienced team, which is led by Mick Davis and Trevor Reed, who were, very well-known players in the global mining industry. And over the last sort of 25 years, this team, many of whom, in addition to Mick and Trevor, have been working together for a long time, have been through different iterations. One was the origin of Genicor, which ultimately became Billiton, which became BHP Billiton, and then Xstrata, which has become Glencore Xstrata. Those have been, in and of themselves, at least 10-year journeys for each of those two situations. And the return has been, really spectacular, to investors in both those cases. So post the merger, the team here has decided they'd like to try it again. Their track record is terrific, and as a result, they had a very, I think, deep audience to talk about what their plans would be. Naturally, it's a difficult time in the cycle for the mining sector. It has been. It feels like things are starting to stabilize and get a little bit better. And I think they feel the timing is good to go and try to create value again through building a small to mid-cap, mining company, and that's what their plans are.
You mentioned there the timing is good. Do you expect the majors to continue to divest assets? When we've seen a statement today from BHP, possibly examining some of its assets outside of the four core pillars of that business. Do you think that's a trend we'll continue to see, the majors divesting?
I think so. I think all of the new leaders of the respective companies have talked about portfolio optimization as being a core element of their strategy. So I do think that the continuing to focus on the businesses that they feel are the most important businesses will be a factor that will continue and a feature that will continue, going forward. There are not that many players out there, certainly in the space that X2 is playing in at the moment,
in terms of
amount of money they've raised to try to capture those opportunities. I mean, one shouldn't assume that the majors are not going to seek value in any reoptimization. They obviously will do. I think one of the differentiating factors of X2 is their experience in the industry means they can also manage all the social issues, they can manage the technical issues, they can manage, the community issues, the environmental issues. They'd be a good steward of assets that perhaps are no longer core to a large resources company, but need to be in the hands of people who can manage them properly.
As opposed to just selling to a private equity firm that might not have done that in the past. This is a very different model that you've got.
It's a very different model. I wouldn't talk to whether private equity could or couldn't manage those assets, but I think these companies will still have very important relationships with the governments of the countries in which they operate, very important relationships with a whole host of constituencies on the ground. So they're going to be very thoughtful, about how they dispose of businesses if they choose to do so.
And the valuations, I mean, it doesn't sound like they're distressed sellers at the moment, or any sort of fire sale of assets happening.
No, nobody would admit to fire selling assets, and rightfully so. The companies and the assets in the sector are still trading at discounts to net asset value. Probably a little bit less so than they were maybe a year ago, but still, we're at a time in the cycle where, the valuations, at least in the public market, are low relative to the historical norms.
Brett, thank you very much.
Thank you for having me.